Good morning. Today is Sunday, September 21st, 2025, and this is the weekly Bitcoin price forecast, looking at where Bitcoin went in the last week and where it could potentially go in the future. So we are pretty much 3/4 of the way through September at this point. We got about another week and some change to go. Well, I guess 2/3 of the way through the month. Another 10 days to go before we close the month out. And so far we are positive, and I think we will continue to end on a positive note. For Bitcoin to go negative, we'd have to go below 108,000. I just don't really see that at this point over the next 10 days, especially after the rate cuts that we had this week. Is something that I've been talking about for quite some time. Um, that is definitely something that will end up bolstering the market. Money has become 25.25% cheaper than it was about a week ago or so. From what it looks like, that trend will continue to lower for the foreseeable coming months, I should say. It's looking like by the end of the year, we'll have about, I don't know, they're saying close to 70.75% rate cuts. So about 2 more rate cuts before the end of the year, and then probably some more at the beginning of next year too, with the next 6 months, the first 6 months of the year. So we'll see how that goes. We will see how that goes, but the point is, at this point, money seems to be getting cheaper. We are in a cutting cycle. We started that at the end of last year, somewhere around September. And actually about this time, we cut 3 times and then didn't cut it all for 2025. So now we restarted that cycle pretty much. So that's good. We'll see what we're doing. We'll see what we're doing. So for the monthly chart, I mean, we've really just been in a range here. So we got above this whole area right here. This was from the end of last year. Price dipped at the beginning of the year. All the markets dipped at the beginning of the year, and then had a huge recovery. And then from there, we got above this area, and now we set a new range pretty much. So the range is pretty much between, I don't know, 108,000 to 116, and then we've had some spikes up to new all-time highs. But so far that's where we're at. On the weekly chart, and I've actually updated my moving averages. I used to have the 50 moving average, the 100 moving average, and the 200 moving average. I have since changed that. It is now the 21 moving average, the 50 moving average, and the 200 moving average. So I consider the 21 to be my short-term moving average, your 50 to be your medium-term, and your 200 to be the long-term. So basically, I've just taken out the 100 and added the 21 in its place. I think that just gives a better representation of what we're looking at. So at this point, it seems to be holding pretty well. So I'm just going to continue on with that. I use that in my day trading and all this other stuff. So I'm going to stick with these moving averages for now. And once we start breaking below the 100 moving average, the 50 moving average, then I'll start adding the 100 to see, okay, where can we fall until we get to the 200 and so on and so forth. So that's kind of where we're at with that. But for now, we're still in this kind of range at this point. So again, I talked about this big recovery period, and then we got above these all-time highs that we had previously. So we broke these all-time highs, got up to a new one, and then now we've come back down to test the bottom of this range, and now we're just heading back up, slowly heading back up week after week. And I think now we're kind of at that tip-off period, especially like I said, with these interest rates that we've been having. Yeah, so we can go ahead and turn on the drawings. Turn on the drawings real quick. Let me see. From this perspective, we have broken out of this range, and I've been talking about, I think we're going to hit the top of this channel once again. Maybe break out of it, come back down to retest to keep going. But for right now, we're still in this channel. We're still in this range. And I've also updated the short-term holder realized price. That was down at 109. It is now at 111. So I think before we take off one more time, we could see one more tap of this area, maybe like the 111, and then continue on to the upside. So we also see that the 21-week moving average is now creeping up to this area too. So we saw that it bounced off of this area and then kept going. It bounced off of this area, and this, I mean, it just obliterated through it, but it obliterated through everything. It came down to the 50, but the 21 is a pretty, kind of strong area that we'll see. So it's a key short term moving average. There's your March all time high. This would be your December all-time high, so that's a key level as well. Let's look at the daily. On the daily chart, I have like these golden red crosses on this indicator, on these moving averages. So this is just one indicator, and it shows where they cross over. So at this point on the daily chart, we have had a cross in the moving averages, as we had a cross under here, and so on and so forth. It didn't actually continue to go down, but when you have crosses like this followed by another cross, that generally means, all right, well, now we're probably about to continue back on, to the upside, especially when you're in an uptrend. So like maybe like the red, the I guess bearish crosses, your death crosses, those those kind of almost signal the end. But then when you have like these bullish crosses that come shortly after, a couple days later, all right, well then that means we're probably about to continue back onto the upside. So that's good to see. Good to see. Right now we're kind of in a key area. This is a bit of a key area right here. The bottom of this range from here to here, all the way over here. So this is what I would call key area. So I mean, it held up for quite some time. It eventually broke. It had a little bit of a pause here. It came above. A little bit of a pause once it got here. Came down below it. Ran back up. Shot back down again. And then eventually made this swoop to kind of come back and test it one more time. So this is what I mean when I say I think it could actually come back down one more time to maybe the 50-day moving average or the short-term holder realized price, one of the two. There's not a ton of imbalance to clean up in this area, but I do think that we could actually see some type of increase coming from here, and then just continuing on to the upside after that. So maybe a short decrease followed by the increase, and we'll see how that ends up going. Let's look at it like this. I see one more kind of key area too. So this is a trend, regression trend. 1, 2, 3, 4, boom, we hit the bottom of this channel or came to the other side of it. So that really kind of is like your launch point at this point. So you got the bottom of this channel, you have your 21 and 50-day moving averages, you have a golden cross that's happened, and you have your short-term holder realized price that's holding at 111. So I think that we're pretty close to some type of liftoff scenario pretty soon here, sooner than later. And if we do dip, it'll be very short-lived. So we've kind of already tested this key area, pulled back a little bit, but now I think it will be time to just continue on to the upside, because we have had almost 2 weeks of just sideways price action before seeing something higher. 4 hour, probably not too much to talk about. We had a golden cross somewhere back here, and the bottom of this channel right here. Yeah, I think we're in a pretty good spot. And even here, you have the 200-day moving average sitting at 14. I'm sorry, 200 on the 4-hour chart sitting at 114,000. So even if it dips back a little bit to 114, you got some pretty heavy support there at that point. So I think that's about it for the charts. I mean, long story short, you could see a small dip before continuing on to the upside, or it could just absolutely shoot straight up from here, and that wouldn't surprise me at all. So let's look at what happened last week in economic news. So the big thing is your federal funds rate, target 4.25, and they actually did cut for the first time in 9 months. So December they held all the way through current day, which is September, and they finally cut to 4.25. And from that point, it has, I think we're just going to keep on seeing a couple more cuts and probably getting somewhere in the realm of about 3.5 to 3 over the next 9 months, I would say. Just bringing those interest rates down, maybe even back to previous levels right before COVID, but we'll see how that ends up going. But I think 3 is achievable. 3.5, well, 3.5 is a definite. We'll definitely get down to 3.5, but we could potentially get down to 3. And see where we end up going. So that's kind of the Federal Board of Reserves. That's their target. That's the median expectation across the Board of Governors, and we'll see how that goes. Other big one was Japan. I've been paying close attention to Japan in the last several months. They have held their rates one more time. I think they're going to end up hiking once again. Maybe not next month or the coming month. It just depends. But they, held this area for quite a long time. But and last time they hiked was January this year. So they haven't hiked this year either. But I think they're in a hiking cycle, and I think they will hike once again before the year is over. So we'll see. Their economy is a bit of a mess right now. Treasury Secretary Bessent, he is saying that the market is pricing in 75 basis points between now and the end of the year. So basically, what that means is we will start seeing higher prices just because, again, across several assets, because, again, the market believes that we are going to keep cutting rates. And I think that's a reasonable expectation. One thing that is good to look at is the overall Bitcoin. Well, that's related to Bitcoin, right? Is your global M2 money supply. So this is just looking at your 21 central banks, the top 21 central banks across the world, um, and looking at their M2 global money supply. So how much money is actually in the system? And that's this pink line right here. The white line is Bitcoin's price, and you see they follow pretty well. The blue line in the background here, this is the year-over-year growth. So you see there are periods where like the money absolutely takes off and Bitcoin follows it. And the money takes off here back in 2021 and Bitcoin follows it, and so on and so forth. So we haven't really had huge runoffs like this. So I mean, this is the year-over-year growth rate as people at 20%. In COVID era, this is like 13%. Right now, we're somewhere around 8%. So that's nowhere near as big as what it was. But I mean, we could see some increase here, maybe to like 10 to 15%, which would put it back up in this territory. Basically, what I'm saying is we haven't really seen those monster moves in M2, which is why we've had a semi-flat Bitcoin curve, because I mean the history tells it pretty much. Bitcoin follows the M2. It is a hedge against inflation, which, hey, if the money isn't inflating as fast, then suddenly Bitcoin is going to grow as fast. But if we start seeing that pick up, especially now that we're starting to see more interest rate cuts, um, that could pick up over the next 6 to 9 months, or even the next year or so. So we'll just continue to track this and follow it and see how that ends up going. So all right, and the last thing I'll look at is the spot ETF. I mean, these are really some objective measures. So M2 is objective. What are your interest rates? That's objective. What is the price doing? That's objective. And then spot ETF flows. That's objective as well. So what I'm seeing at this point is like at the beginning of the year, was it? No, I guess this was July. That we had for this year, we had a peak in July in terms of them buying, so billions and billions of dollars, 1.2 billion in a day, and then it kind of fell off over time. So and then at this point, we started to creep back up again in early, I guess mid September, and now we started to fall off again in terms of buying. So the buying has slowed down just a little bit. If I'm looking at, if this is a moving average, and I'm sure somebody has a moving average, but it would go something like this. Like it would go up and then it'd come down a little bit, then go up and come down, maybe be flat here for a while, then come up once again, and then it would finally just kind of make this little dance around the middle line here. But what I see is there's a bit of a downtrend over the last couple weeks, so which makes sense as to why Bitcoin, especially within the last week, has not really gone anywhere. Um, but we'll see. We'll see. I think good times are ahead. I always do. Bitcoin has been primarily pretty flat this cycle. It hasn't been a nearly as exciting of a cycle as some of the other ones, namely 2021 to 2017 were. But I think that's almost a sign of maturity. I mean, it's a much bigger asset class now. It is adopted by larger institutions and countries, so we'll start to see less crazy pumps and definitely no dumps. So the thing is, it hasn't, even though it hasn't gone up crazy amounts, it hasn't fallen either. It had the little fall in, and really it didn't at the beginning of the year. Most of the markets tanked at the beginning of the year, and it really recovered fantastically once around the time that tariffs were released, and that whole thing started to come out. So we will see. We'll see how the rest of the year ends up going. At this point, I don't see any other huge catalysts. I think we got a lot of regulatory clarity already. At the beginning of this year, now that interest rates are looking like they're going to start dropping, that is a catalyst. But that's already started. The only other big catalyst that I could end up seeing within the next maybe 6 months is some type of approval of a strategic Bitcoin reserve. And something being written into the legislation and whatnot. So I think that is possible, and it's something that's definitely been on the board, but it just has to get that approval and work its way through through Congress. So we'll see how it goes. We will see how it goes. But other than that, y'all, I don't have too much. So this has been Chris Talks Crypto. Check out any crypto-based resources on christalkscrypto.com, and I will see y'all on the moon. Take care. Bye-bye.